Hey guys, Tex here. Welcome back to the channel. Today's Wednesday, August 25th, 2021. So in today's video, I want to break down a trade that I took on Apple for a loss today. We'll show you the criteria that I was looking at and how I executed this trade, and just really explain why this one loss in the grand scheme of things really doesn't matter. So as always, guys, I appreciate you watching. Do me a favor, make sure you leave me a like if you're enjoying the video, leave me a comment below, and let's go ahead and roll the intro and jump into the charts. All right, guys, so welcome back to the channel. Now I want to talk about this trade here on Apple, just dissecting our hourly chart, right? So first and foremost, this morning, there really wasn't a whole lot that I liked off the open. Pretty much everything was opening mid-range. I was looking at NVIDIA. NVIDIA did have some potential to the upside, but the problem is it didn't really give me a good entry off the open. It just pretty much ripped straight off the open. It did give a setup a little bit after the open, but I opted not to take it. So unfortunately, that meant that I missed a good trade in NVIDIA. But it really didn't make me feel that triggered. And then we tried to take a trade on Amazon. I couldn't get filled on that either. So it was a little irritating, but I wasn't really super triggered. But the problem is that I got bored, you know, and so I was looking for any opportunity out there. And Apple was really what I thought would be the best opportunity, because we were starting to see a nice breakdown here on the hourly, big profit taking here coming into the close of this hour. So I was looking at the next hour, which this candle here is this is my time, so this was 10 o'clock Central, so I guess 11 o'clock Eastern. But I was looking at the top of this hour for a potential counter trend bounce, and obviously I didn't want to try to anticipate it. I wanted to wait for signs of reversal, and I'll show you what we were looking for. But you know, looking at our 60-minute chart for the trade idea and the targets, obviously I wanted to see a retrace back up into the hourly 9 EMA, and you also had a PCL above. A PCL is a prior candle low. You can see that this candle low right here was preceded by a breakdown candle, which establishes our PCL, right? So we know that that's going to be overhead resistance, and that's kind of the target that I would expect to shoot for. Now, the problem is that we broke down below a calc level here. And that there was a chance that we could go lower. Now, I was also looking at the fact that we did have a prior PCH here, granted that had already been tested, but coming into the close of the hour, opening a new hour, holding right into that PCH level, which if you kind of zoom out on your chart, that is lining up from a technical perspective. That is lining up with all of this prior resistance. There was resistance for all of this price action here, and it was support for all of this price action here. Okay, so there was technical analysis lining up there, as well as time, price and time, a very important consideration with Smash's system and what we were looking for in this particular trade. So we had our trade idea, the open of this hour, looking for a retrace higher. However, obviously the price action was incredibly weak, and there was just too many factors against the trade that it did not work. And this is one of the things that being a professional trader involves, right? We have to think in terms of probabilities, and sometimes you might believe that you're thinking in probabilities. I know that I have, but in reality, you probably aren't truly thinking in terms of probabilities, because when we are taking a trade, it's very easy to get focused on the outcome of that one particular trade. And it's really important to just think of that trade as one trade in a sample of trades, that when you trade your edge and you execute properly without any trading errors, you have a definitive edge, a higher probability of being profitable most of the time than not, right? So that's why this one particular trade doesn't matter in the bigger picture, because it was a valid setup and it was a valid entry into the trade. So this was the idea we saw on the 60-minute chart. You know, Apple has been in a positive slope for a while, but we are starting a potential negative slope. So that was one thing to consider, right? We have a lower high established here, but in the macro picture, of course, Apple is in a positive slope. So with this lower high here, it made sense that there was a chance that Apple might want to come lower. Now, when we saw the potential signs of a reversal and on our shorter time frames, this is what triggered us to go ahead and take the trade. Again, we saw that 148 and change level was that PCH. You had a technical analysis level there. So there was criteria to be taking the trade, but we first have to look for that sign of reversal, right? We can't just be, you know, anticipating the bottom and kind of catching a falling knife without that reversal signal, right? And so when we look at this and we dissect our price action on our 5-minute time frame as we're coming down here, you can see that we're never really getting super extended away from the 9 EMA. So there's no kind of counter trend play here anyways. So we just patiently wait for our first signs of reversal. Where do we get it? We get it right here, right? We see that we get this nice big breakup candle that clearly breaks over a prior candle high and establishes our first PCH, which is a prior candle high. So what we can do is take a line and just draw it on the high of that candle right there. Now we get this break higher, we come up and just back test the 9 EMA on the 5-minute. A little bit extended here, so it makes sense that we do that. Now this is right at the bottom of the hour. So this candle here is the open of a new hour. And this is exactly when we're looking to take the trade, at the open of the new hour, basing our trade off of a reversal signal here on the 5-minute, right? We have the PCH. Now, we get this candle that comes down perfectly into the PCH. However, it doesn't do it quick enough, so we have to wait for this 5-minute candle to close. Next one opens, it's within the trigger range of our entry, and so we take the trade. And ideally, we just don't want to see price get below that PCH. We can risk off of low of day, but if this in fact is going to be a strong reversal that we want to be involved with, then this PCH will hold, okay? And so you can see that we do get a bounce off the PCH, and we struggle here with the 5-minute 9 EMA. So as we're struggling here with this 5-minute 9 EMA, I see this and I'm thinking, all right, now the NASDAQ is a little bit weak on the day. It's not by no means selling off, but it is showing some relative weakness compared to the S&P 500, which was actually pushing to new all-time highs. So I see that, we obviously have a little bit of a headwind in that regard. There's some clear profit taking coming in here. Yes, we're starting to see signs of reversal. We do have the hourly setup, so all we can do is take the trade and set our stop. So I literally bottom ticked this entry here on the options, and I was able to keep my stop very, very tight because I knew, again, if this PCH breaks, it's gonna put in new lows. And trading Apple as much as I do, a little bit of a discretionary aspect to it, but just trading Apple as much as I do, I know the price action when it's very weak. I can just see the price action, how they will really stuff every move higher down. And so I'm looking at this on the tape and I see this candle here, it pops up and they just stuff it right back down. I mean, heck, we can't even get to the 15-minute 9 EMA. This is where we're looking at here, and I'm looking to sell my first target into the 15-minute 9 EMA because this is just looking really weak. It just had so much trouble getting up there. So I'm beginning to realize that I'm probably not going to get my hourly target here. And so at this point, as we reject here on that 5-minute candle, and they stuffed it down, I took off some of my position, but not very much because I wanted to make sure that I still held enough to really justify the risk to reward on the trade. And unfortunately, you can see we broke back down here to the PCH, and it was on this candle here where I actually got stopped out of the trade. And I really didn't lose very much. I mean, in the grand scheme of things today, I only lost about less than a quarter of an hour of my max daily loss. So I kept my risk really tight today because, again, it wasn't like an A+ setup. It was a setup. There was a potential opportunity here. You can see how it tried. So spotting the entry, executing the entry absolutely perfect, and that's all we can do. Now, this one particular trade didn't work, and I don't really care. And why don't I care, right? Because it's just one trade in a sample of many trades that in the grand scheme of things, the probabilities of this edge dictates I will be profitable as long as I execute this edge without any errors. And so that's really the key here, guys. So with that, like I said, it's not anything glamorous or anything really to write home about other than the fact that it expressed how patient I was this morning waiting for at least some kind of a valid setup, right? I am not going to be chasing things, and I'm not going to be just jumping into breakouts just because there's, high momentum, and it's just not really something that I've ever been super comfortable with. And today, NVIDIA was pretty much that. You had to be jumping in straight off the open on that high momentum. And, it's unfortunately that, it just didn't really give me personally an entry that I really liked. So with that said, guys, hopefully you got something from the video. Like I said, the biggest takeaway here is that when we have a valid setup per our trade criteria, all we can do is take the trade, accept the risk, set our stop, and the trade either works or it stops us out. I mean, that's all there is to it. And, over a series of trades, if we do this properly, we will be profitable, assuming, of course, you are trading a clear edge that dictates that. But otherwise, it's just very important that we train our brain to think in probabilities like that. This one particular trade, the result of this one particular trade means absolutely nothing. What I care about is the result of trading this particular edge, this particular setup, over a series over the next 20 trades. And that's actually something that Mark Douglas challenges new traders to do, is to establish an edge ahead of time before you risk any real money. Establish some type of methodology or edge that you have in the market where you can extract money with a high probability of success from the market, and have it basically black and white, right? The criteria that say when you can take the trade are black and white. There's no decision to be made. There's no subjectiveness to it, right? The criteria are either there or they're not. And if they're there, you take the trade and you set your stop at the agreed upon risk level that you were willing to take when you start this challenge. And you do that for 20 straight trades. So the next time that setup or edge presents itself per your criteria, there's no questioning yourself. There's no like, oh, I don't know. It looked pretty weak the way it was coming down to that level. It was selling off really high. I just didn't like the way it looked when it came into that level. If the criteria were there for you to take the trade, then it doesn't matter. It just doesn't matter. Whatever that criteria is for your trade, for your edge, if they're present, you take the trade. No questions asked. You set your stop, and over a period of 20 trades, if basically you have to accept whatever risk that you're willing to lose over 20 trades if they were all losers. Now, the odds of that happening are probably about as remote as all of them being winners, but the idea is that in advance, you say, okay, I'm willing to risk $1,000 on this challenge. So you break $1,000 up over 20 trades, and that's how much you can risk on each of those 20 trades. And you take every single one of them without question. And I'm going through that process, and I can tell you right now that it's incredibly difficult after you have a string of losers to take the next one, because everything in your body is screaming to not take the trade. It's going to be a loser, but you can't do that. That's the most important thing of this challenge. And again, it's not meant to prove that your edge or your system is profitable. You have to do that ahead of time, by back testing, paper trading, but it's to simply train your brain to genuinely think in probabilities, right? That's the most important takeaway, and that is what I am working on right now. That is my number one goal right now, because apparently even I didn't truly think in terms of probabilities, or not at least to the extent that I should be. All right, guys, so I'm going to wrap it up there. I hope you had a great and green day of trading. I probably won't be able to make any more videos this week, so I wanted to get one out for you today. And hope you guys have a great rest of your week, and I will see you guys in the next video.